Hey everyone, ASML, one of the leading semiconductor companies in the world, is scheduled to report quarterly financial results on July 17. So I'll answer if investors should buy ASML stock before it announces its earnings release or after it announces its earnings release, or if investors should buy ASML stock at all. I'll preview what investors should look for from the company in its upcoming earnings release, as well as answer whether or not I think the stock is a buy right now. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its first quarter results, the quarter prior to the one it's about to report on, ASML reported total net sales of 5.3 billion euros with a gross margin of 51% and net income of 1.2 billion. Quarterly net bookings in Q1 totaled 3.6 billion, of which 656 million is EUV, its latest generation technology. ASML expects second quarter net sales between 5.7 and 6.2 billion and the gross margin between 50 and 51%. At the midpoint of this forecast, it would suggest roughly 5.9 or 6 billion in revenue, which would be a sequential increase from the 5.3 billion in revenue in the first quarter. Remember, ASML said that the second half of this year is going to be much better than the first half, and already they are expecting a sequential increase from Q1 to Q2. Overall, for the full year, ASML expects 2024 net sales to be similar to 2023, so not very much growth this year. That being said, ASML expects significant growth over the next several years, starting in 2025. Remember, the semiconductor industry went through a cyclical bottom and is now rebounding on the back of the rising effectiveness of artificial intelligence. That demand for semiconductor chips as a result of the rising effectiveness of AI is slowly working itself through the system all the way back to ASML. ASML is essentially the beginning of that supply chain. ASML sells the machines to companies like Taiwan Semiconductor and Intel and Micron Technology to create these innovative next generation semiconductor chips for AI. So as demand has increased coming from NVIDIA, pushing all the way back to ASML, you can expect an increase in revenue and profitability for ASML. So just as I highlighted, the CEO said that they expect the second half of the year to be stronger than the first half, and that's in line with the industry's continued recovery from the downturn. We see 2024 as a transition year with continued investments in both capacity ramp and technology to be ready for the turn in the cycle. So I mentioned already that the semiconductor industry is coming off of this bottom, right? But ASML over these last 2 years hasn't just sat around and wait for the recovery. They invested in the latest generation, next generation technology to be ready for that upturn in the cycle. So they are ready for this. They've told investors on several occasions that they have been investing in research and development, and they are ready for this upturn in the cycle, and they're going to be ready to serve these expansions in fabrication facilities for semiconductors, right? You've heard all of these announcements from Intel, which is investing tens of billions of dollars in new semiconductor facilities. You've heard investments from Taiwan Semiconductor and its expansion into new geographies in Japan and in the United States with more facilities. Samsung as well has said they're investing in new facilities in the US. So all of these companies are investing in expansion, and ASML will serve those companies expanding. And this is just the beginning, as governments worldwide have announced tens of billions of dollars of support for these expansions, right? Micron is getting $6 billion from the US government for increasing its manufacturing in Idaho and New York. Intel is getting billions of dollars. Taiwan Semiconductor is getting billions of dollars. So governments are supporting and helping lower the cost of these new facilities, which is incentivizing these companies to go ahead and expand their facilities. So as I highlighted, ASML is a leading supplier to the semiconductor industry. The company provides chip makers with hardware, software, and services to mass produce the patterns of integrated circuits, these microchips. Together with its partners, ASML drives the advancement of more affordable, more powerful, and more energy efficient microchips. It's a positive, virtuous cycle. As these microchips become more affordable, more powerful, and more energy efficient, that creates further demand for these microchips because they're enabling more powerful, more energy efficient microchips. So they pay for themselves because of the advancement in technology. So it's this positive virtuous cycle that's created this surge right now and the breakthrough into large language models and generative AI. Longer term, ASML has done a great job growing revenue and profitability. Over the last 5 years, revenue has increased from around $14 billion up to $28 billion in 5 years, so roughly doubling in 5 years in revenue. Operating income has similarly jumped to $8.9 billion, up from less than $4 billion in 2019. ASML is one of the more profitable companies in the world. It has one of the best competitive advantages in the world in that its EUV machines are unmatched by any competitor. The stock is not cheap, however. It's trading at a forward price to earnings of 34.15. It's also not expensive. It's fairly priced. If you go back all the way to 2020, this stock has traded at a forward price to earnings ratio in a range between 20 and 60. I would argue that 60 was a little bit overvalued, and at 20, it was very undervalued. So at 20, it's extremely undervalued, and at 60, it's overvalued. So at 34, it's right about around the middle, fairly valued, slightly undervalued, you can argue. I've had ASML stock rated as a buy all year long, and the stock has performed really well. It's up 45% this year. So to answer the question if I think you should buy before or after earnings, I would say it's equal-sided risk. There is upside following the earnings release. I highlighted how the second half of the year is going to be stronger than the first half. So this second quarter results are not going to be the big picture in this earnings release. The big picture is going to be the forecast for the rest of the year. Now, if management gives a very robust forecast for the second half of this year and for 2025, if they start talking about all these new orders they got for 2025, then that could really put a fire under the stock. Similarly, if they were to report disappointing forecasts for the rest of the year, if they report tepid orders for 2025, then the stock price could fall following the results. So this is one of those scenarios where I would say if you have, let's say, $1,000 that you're looking to invest in ASML stock, I think the most prudent thing to do would be to split it up 500 and 500, buy 500 before earnings and 500 after earnings. That way you reduce the risks on each side of that equation. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.